Now it's time for us to look at something that's been generating some excitement over at gt247.com. And today, I don't know if it's excitement or suicidal tendencies, whooping and high-fiving by the shorts, but African Bank trading update. It's a stock that's slipped a long way in recent months. You've been saying that you don't like the look of it at all. We are long it in the HotStoxx portfolio, which is bad news. But just talk us through what's going on here, Mark. I mean, Able already looking a bit weak and holding sort of levels of 27, 28 Rand a share, crawling back to 29. Boom today, down a big number, 16% on the day to around 24, bobbing along. I mean, what does one do in a case like this?
Well, look, I mean, the share price had been kind of ambling along. We've been very nervous about it for a long time. We've articulated that a number of times, but the sleeping dogs lie. We know that one of the asset managers took a fairly large chunk of them, about 5.1, 5.2% in the last month or so. But that's also going to be a big problem for them, I suppose. The guidance on the headlines earnings were pretty negative. We've been kind of cautioned that there was, not cautioned, but subtly cautioned.
Because remember, they have a September year end, so this is now guidance with regards to their first 6 months up to an ending March.
Yeah, so it's, and the guidance has been negative. We've had a negative view on them for fairly a long time, purely because of the nature of what we feel is the way the kind of unsecured credit universe is functioning at the moment. And we've always had a very strong suspicion that things can quickly escalate. If your default rates on, or your contingency rate on people taking out short-term debt increases, and you've not got more new participants coming in, the equation doesn't work. No matter how you try and control it, actuarially it doesn't work.
So what you're implying is that, first of all, there's been a lot of new credit supplied to this market because the big banks have also been doing lots of unsecured lending. So the pure players, which are obviously able in the first instance, and maybe Capitec secondarily, and maybe even Transaction Capital as a third, they're all getting a little bit anxious about the extent to which they can write new quality business. They're all upping the amounts that they allocate, in terms of write-downs of existing non-paying loans, which is always a factor in their business. But sometimes if they're anxious, they put more to it. And the ability to write sort of quality business going forward is looking a bit tenuous. So all things being equal, this thing gets marked. There's the day price. So it's down now to around 24 Rands a share.
16, 17%.
But what you will notice is that they made like 3.40 Rand last year. So even if they make 25% less this year, we're looking at earnings at around 2.50 Rand to 2.60 Rand, 2.70 Rand next year. So at this level, they're back at the sort of normal 10 PE. They're a dividend payer, still profitable. Huh?
Maybe not. The problem comes that these kind of factors begin to spiral. Once that default rate starts to escalate, the operations like African Bank, they go to the markets and they fund at a certain kind of rate as well. They end up taking hits in various areas in terms of the mechanism. So the real risk is if certain aspects get a little bit out of control. And I'm not for a moment saying it's an out of control issue. I'm saying I think it's being very well managed, and it's being very constructively, and management's being very forthright in their approach. They've incorporated additional facilitation into these numbers, so the numbers are a little bit dressed on the negative side. But the prognosis still remains negative.
And that was very clear in today's comment. They said, look, it's not looking so great for going forward.
Yeah, so the view is at the moment, if you are long, be careful.
We are long, and we're at a fairly modest size long, as we'll see in a little while. Now, I'm going to have to fess up here to something very, very naughty, and that is that when they fell this morning, our prior stop loss level on this position was 24 Rand. And I could see that it was getting dangerously close to that level. So what did I do? I went into the system on gt247.com, and I lowered the stop loss level from 24 to 20, which I know is like...
That's a no-no.
Trading 101. What a terrible thing to do.
Yeah, I mean, look, it just goes to show, it illustrates the fallibility that we all have as traders and position takers. We know the stock intrinsically, we know it in and out, it goes a little bit off expectation. We say, okay, well, we can weather a little bit more. Generally, as a rule, one should never, ever do that. It's escalating your commitment to something which is losing.
So it's not quite as bad as sort of doubling down and buying more at the low just because you don't want to be wrong and because you sort of want to put more money in harm's way. But in a way, it's sort of throwing out the thing that's designed to be there to discipline you in cases when you're off wrong.
Yeah, it works for a number of reasons. First of all, because the positions are usually a little bit more leveraged than you would do naturally. That's the first kind of thing, that the light that should kind of spin in the back of our heads. And secondly, it's not there it's there at a level at which one is wrong. One can square off at that level, take the hits, reevaluate. The share may be 2 rand further down, in which case you've saved money. The share may be 2 rand further up, in which case the momentum may take it further. But it creates a breathing space as well to be cold and calculated.
Okay, but here's another scenario, and this close on this slightly different note is, say you're not in the position at all, right? You see a big index constituent of this nature down 16% on the day. You know that it's a stock that's been heavily shorted. You know also that in cases like this, the short sellers like to really push it down in order to try and force some kind of capitulation. Then against the backdrop of what's been quite a generally strong market, you might say, well, the shorts are going to get tired and they're going to book their gains and there could be a little bit of a rebound. Is that a trade you've seen people play successfully, coming in at these lows?
I have seen that happen, but one of the factors with this share is that this share is a very, very heavily pushed share into the year. Every single a lot of prominent analysts, etc., were saying everybody should have one. So the other side of the argument would be that it's going to be a lot of longs that are taking a bit of punishment as well. But there definitely have been some decent shorts in there, and we know that there's always going to be an overreaction, maybe a little bit of overreaction, a little bit of stability, a little bit of kind of froth, and then the true trend will emerge.
So what you're saying is it doesn't look to you like something that's going to rebound in any kind of decisive fashion, but it's possible. At times like these, sometimes there is a little bit of an oversell.
Yeah, if I didn't have a position at the moment and I wasn't short and I was trying to work out what was going on at the moment, one simply wouldn't short at these levels. You just wait. If we get a bit of an improvement here, sentiment picks up, there's that short covering possibility that we're talking about. And then if the fundamentals remain a bit dicey, I don't really see much reason for them to improve. They may not be as bad as we think, but I don't see any reason to improve. Then we hit them down when they're running up again.